yeah, so really trying to look at what's out in the world and what might apply to your specific situation. For me, that's the deal. How much in tax are you paying and how much are you trying to write off?
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. If you are enjoying this show and getting some great value for your investing goals, be sure to leave us some honest feedback with a rating and review. It helps us, but it also helps other listeners find this show for their own investing goals. And if you haven't done so, or this is your first time listening, be sure to hit that follow or subscribe button so you don't miss an episode. And we've got a great show today. We're going to be talking to Shauna the Tax Goddess. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the Mastermind button today. Shauna the Tax Goddess is a 2-time published author who founded Tax Goddess Business Services back in 2004. This is a 100% digital firm with an expert team of more than 93 people around the globe that has saved her clients over $1 billion in taxes. Let's welcome to the show, Shauna the Tax Goddess.
Aw, hi, thank you so much for having me. I'm excited to be here today.
Absolutely. I'm excited to have you on the show. Went over your bio and background at a very, very high level. Why don't you take 2 minutes and fill in some of those gaps?
Oh, I love it. Well, thank you. Yeah. Okay. So background, I started in astrophysics. Very long story short, definitely a numbers kind of girl, right? Fell into taxes because my mom got an IRS notice, and any good daughter, when an upset mama happens, you fix the problem, right? So very long story short, switched to finance, accounting, tax. For those of you that can see me, there is a ton of initials after my name. So I am a CPA, master's in tax, certified tax coach, certified tax professional, certified tax strategist, all of which is to say that I am in the top 3 out of 660,000 CPAs in the entire US that do tax strategy. They refuse, the ranking organization refuses to tell us who's number 1, but I have an idea. So
Top
anyway,
3 out of how many?
660,000 according to Google. So
Wow.
just a few.
How do you yeah, how do they identify the top 3 out of 660,000?
Absolutely. So I'll run down the numbers. So per Google, there's 660,000 CPAs, right? So CPAs are kind of the first level of anybody who really does tax stuff, right? Now, CPAs can, of course, do quite a few things, right? They can be controllers, CFOs, bookkeepers, right? They can do all sorts of things. The next level up when you start to specialize in tax is a master's in tax. So there's about 60,000 of us. Then you go to certified tax coach, which CTC, there's only 807 was my last number that I had. Certified tax professional, there's about 250. And then certified tax strategist, we are the people, all the CTP, CTS, CT, whatever, we all specialize specifically in tax strategy. So when you get into the top 15, which is the certified tax specialists, right, the CTS, they start to rank us by how much money we save people. So this past year, we're now, heard the number you said, we're a little over 1.68 billion for this year. So yeah, and I know the numbers of the other 2, but they refuse to tell us who's number 1. I don't know why, but there you go. So it is what it is. So yeah, when you start to look for, many people will go to their CPA, their enrolled agent, their Uncle Bob, right, who's doing the taxes, and say, okay, great, I need some tax strategy. I'm not happy with this bill that I'm paying. They don't really understand that there's kind of this pyramid of tax strategy specialists. And so that's where we come in. So.
I love it. And that's so helpful. We talk to so many tax professionals. And I myself have never understood what those initials actually mean. And that's the first time I had someone break it down. So you can rewind that and play it back. But for those who want the quick version, there's the CPA, which most people are familiar with. Then there's the MTax, the Master Tax or Master of Tax. And then you have the CTC, the CTP, the CTS, Certified Tax Professional, Certified Tax Strategist. And that's that pyramid you mentioned with that tax strategist being kind of the upper echelon of tax professionals. Help me understand, like, so for your average person, right? Like, they're probably not getting the certified tax strategist given how few of them there
Yeah.
are in the world.
Yeah.
How do we go about seeking tax professionals to help us with our tax situation?
100%. So I always look at it from the standpoint of how much in taxes are you paying? Okay, that's really the place to start. So if you're paying $10,000 or less every year in taxes, your day-to-day CPA, your enrolled agents, they're probably going to be fine to help you get rid of, legally remove those taxes. Okay. When you start paying $100,000 a year in tax, you need to really start looking at the master's in tax level, the certified tax coach level, right? And when you start paying over $1 million a year in tax, that's really when you need somebody like me, that certified tax strategist. Now, the first question we always get is, well, yeah, but I've never run into any of you anywhere ever, right? I know the CPA, right? And every year when I go to my CPA and say, okay, I want to pay less taxes, they say, great, buy a new car. Okay, I don't need a fleet of 10 cars, right? It doesn't really help me. So one of the things that I love about today's environment that we're in is that you can learn a lot about different kinds of tax strategies from YouTube, from TikTok, from all of these places. Of course, understanding, please do not take tax advice and actually implement them from YouTube or TikTok, right? You do need to find somebody that knows what they're talking about as far as the strategies themselves. So really we start to look at, well, how much tax are you trying to write off? What industry are you in? So of course, all of our listeners here are typically real estate. Of course, you might have some syndication, some investment type stuff as well. So what does your tax professional, your tax strategist know about your specific industry? It always makes me smile. If you're working with a CPA that says that they know real estate, but they don't know what a cost segregation is, you get up and walk out of that office. Okay. Like that's the bare baby hanging fruit. Okay. So you gotta switch out of that. But yeah, so really trying to look at what's out in the world and what might apply to your specific situation. For me, that's the deal. How much in tax are you paying and how much are you trying to write off? So
That's a great way to break it down, right? So really based off of the tax liability, right? If you're paying $10,000 in taxes, your CPA is probably fine. If you're paying 100,000, you want that in tax. If you're paying 1 million, though, you want to find that top echelon of tax professionals, a certified tax strategist who's going to help you really mitigate that and maximize your dollars. You mentioned earlier too, like, hey, most people might have an uncle or someone else that they know, or, someone they've been working with for the last 10, 15, 20 years, right?
yeah.
Or this is the person who did my dad's taxes. So a lot of people have that familiarity, and a lot of times they don't realize that maybe this accountant or the CPA isn't taking the advantage of the opportunities that are in front of them. So how does the typical person or your average person know if their current accountant isn't getting them the best tax strategies?
Absolutely. For me, it always comes down to the Wall Street Journal article, okay, or whatever magazine you're reading, right? If it's Wall Street Journal or this TikTok video, like the strategies that you hear about, right? When you go to your tax preparer and say, hey, we'll pick on Mr. Trump, okay, Mr. Trump is using XYZ strategy. How do I apply that myself? If the immediate answer is, oh, no, you can't do that with no discussion, no questioning, no trying to dig into the details in any way, you are not working with a strategist. Okay. A strategist, we tend to look at everything from the viewpoint of a chessboard. Okay. So different people have different pieces on the chessboard. So I can see in your background, we've got kids. I'm pretty sure I see wife in one of those pictures, right?
Yep.
So I'm single and I have dogs, right? Completely different chessboards, even at the basic level, right? Even before we start talking about What kind of investments do you have? What kind of businesses do you have? What are your goals? What are your passions? Some people are trying to build a 100 SFR door passive income stream, and other people just want to put their kids through college. Two completely different sets of chessboards. And so no matter which level of strategy you're looking for, if the person that you're working with says they're a strategist, but they don't ask you, who are you? Are you married? Do you have kids? Do you have dogs? I mean, you can write off some dogs, but can't write off other dogs. Like, how are they going to help you with any strategy if they're not figuring out who you are? We've seen this especially lately, where there's a lot of I don't want to call them fly-by-nights. I don't know what better term to use them, but there's a lot of people kind of coming into the strategy world saying, oh, we've got the silver bullet that's going to make you pay no tax forever. Right? If they don't know who you are, how are they going to give you the one silver bullet? It's not how strategy works. Strategy is typically a layering effect, right? I mean, even when we're talking real estate, yeah, it's great you got a cost seg done, but if you don't qualify as a real estate professional, or it's not a short-term rental, cost seg doesn't do you any good. So if your strategist doesn't ask you questions, they won't know how to guide you. So for me, that's the biggest difference between, your day-to-day CPA preparing the returns, or your Uncle Bob or whoever that is, and a strategist. CPA just keeps you out of jail, right? They fill out the forms, they take your information, they prep it, they ship it to the IRS, right? Strategist actually helps you reduce the taxation. So
I think that is so just important for people to understand. What you hit on is the tax strategist is going to understand what your situation is, right? You talked about looking at a chessboard. You can't just react and say you can't do this or you can do this. You have to understand the story, and you got to get more inputs in order to do that. And your tax preparer, they don't, right? They just take the documents you get, they start working maybe January 1st or January 15th,
they're
whatever day
focused
it
on
is.
April 15th. Get it
Then they
done.
focus on April
That's
15th. Your
it.
stuff
Yeah.
is filed, and that's it, right? They're maybe not asking you a lot of questions. And I know for some folks, particularly when they start moving up in tax brackets, that's when they start to realize, wait a minute, man, I'm paying a lot of taxes, or there's got to be a way to reduce this. And now you
Yep.
start to get more inquisitive of what's out there. And unfortunately, it's after the fact, after your tax preparer has, filed the documents and you're paying,
Yeah.
5 figures, sometimes 6 figures in taxes, if not more. And that's when you start to realize, okay, maybe I don't have the right people on my team. Can you elaborate just a little bit more on the difference between that tax preparer and the tax strategist, and what we need to do to make sure we're getting the right person and the right timing? Like, I don't know if we should be doing this,
Definitely timing.
June, December 1st, or when should we make sure that we're having tax strategy conversations as opposed to conversations around filing our taxes?
Let me start with the timing, because to be honest with you, I think that's the most, I mean, of course you have to have a strategist, right? But the best time to start strategy was yesterday. Okay. So, we're talking, it's kind of the end of the year, right? If you call a strategist on December 25th and say, hey, I have $100,000 tax bill I need to get rid of, they already have champagne in their hand. They're already eating Christmas cookies. Like, we're done, right? The end of the year is nigh. Okay. There's not much you can do. There are a few strategies that maybe if you can find a bank that's open, you might be able to do something. Okay. So really the best time to start strategy is always yesterday. Now, if you do come across this episode and it is December 25th, and you're like, oh, now I'm sad, now I've realized that I've made all this money this year and I want to do something and I want to strategize. There are 3 or 4 strategies that you can implement within the first 30 days of the next year. So by January 30th of the following year, that can go retroactive. There's even a couple of them that can go all the way out to September and October of the next year and be retroactive. But if you want big bang for the buck, right? So if you're looking to reduce your income by 100,000, 300,000, 500,000, those types of plans are not wave the magic goddess wand and they're done, right? You need 3, 4, 6, 8 months to get them in place, to get them set up. I always liken it to, again, buying property, right? If you're buying a residential, you've got a 30-day due diligence, right? If you're buying a commercial, so if you want the little strategy, 30 days. If you want the big strategy, it's 90 days. You need time to be able to lay the work and to actually get this stuff done. I think that's one of the biggest questions people ask us is, oh, great. Okay. So I've signed up for a strategy. You're going to reduce my taxes by $100,000 this year. That's great. We can do that, but I can tell you what to do. You actually have to do it. So that's the other side of it. If I'm eating Christmas cookies on December 25th and you're eating Christmas cookies on December 25th and the banker's eating Christmas cookie, who's going to do it by December 31st? That was part of the question. So
I love that, Shauna. Talk to us a little bit more about some of the options that are out there for financial advisors to help their high net worth clients save on taxes.
love it. Love it. So I always look at, there's really multiple different types of strategies. Okay. There's strategies where you keep your own money. Okay. So you're really moving money from one pocket to another pocket. So for example, putting your kids on payroll. Okay. The money is still in the family, right? So the money comes out of your business, goes to the kids. You were going to buy them Christmas presents anyway. You might as well let them pay for their own Christmas presents out of their wages. Okay. So the money stays in the family. It doesn't go anywhere. Another one, you mentioned it earlier, I think the Augusta rule, right? So the Augusta rule is your business can pay your home rent for using space for business purposes, right? So if you're hosting a podcast in your home, if you have vendors over, if you have clients over for an educational event, something like that, your staff, your team members, okay? All of those things can count as a way that the business can pay you personally funds. None of it is taxable, which is great. The kids' payroll isn't taxable. The Augusta rule to yourself isn't taxable, right? So this is all money that we're moving money, but it doesn't go anywhere. So that's kind of the first level of strategy. The next level of strategy is money that you're going to put somewhere. It's still yours, right? So let's say, for example, we're looking at a captive insurance company, okay? You've had a big sale this year, some sort of big revenue, right? And you're trying to basically shelter, like legally. Side note, everything we talk about is legal. I always have to throw that in here, okay? Because we get questions going, are you really allowed to write off your dogs? Yes, you are. Anyway, so you can put money aside, but it's trapped for a year and a day. Okay. So it's still yours, still in your pocket, but it's trapped for a year and a day. So that's kind of the next level, right? Then you get access after a year and a day. Then you start looking at money that is still yours, but you can't have it until you're 55, 65, like retirement ages, right? So we're talking cash balance plans, defined benefit plans, maxing out the mega backdoor Roth, the regular 401ks, all the different types of retirement plans. That money is still your money, but now it's trapped, right? So you really can't get to it unless we do self-directed IRAs or something, specifically in real estate. Sometimes you can do some really cool self-directed type of retirement plans. And then the last kind of money that we tend to look at is money that's going somewhere else that's going to give you a big tax benefit, but you better really like the investment. Okay. So investing in oil and gas, investing in solar, investing in film credits, investing in historic preservation easements, conservation easements, okay, regular easements. There's a million and one different kinds of investments, but with all of those investments, your money goes somewhere else, right? And I think I like them. I don't know. Did they do a good job? What was their return last year? There's now a whole bunch, excuse me, a whole bunch of unknowns that you may not know because the money is not in your control anymore, right? At least if it's in your self-directed IRA, you pick the real estate property, you know whether you think it's good or bad. Some people like that, some people don't, right? Some people like other people to have control. So just kind of depends on who you are. And again, how much are you trying to get a deduction for? How much are you trying to save? So,
Shauna, really great tips. I mean, the way I kind of capture what you said in my head is there's money that moves from one pocket to the other, right? Paying your kids is one example of that, or writing off kind of the what your home and what you use for business purposes in your home.
yeah.
The other thing was money that you move into more of a temporary or shorter term hold, so year and a day. The other is more of an investment, so it's trapped, but Again, you get to select what you invest in. That could be through self-direct IRAs and accounts like that. And then last is where you're truly making a pure investment, third party, you're investing in someone else's deal, whether that's oil and gas, real estate, whatever else, but you're really passive. You're truly investing and you're kind of beholden to the business plan of another operator. These are some of the strategies to really help those who are, fairly wealthy, really reduce their tax burden. You wrote a book, you got just a lot of information. I'm sure the book was probably hard. I don't know if it was hard or easy, right? I don't know if it just flowed or if it was like, man, there's so much to put in this book. How do I know what to cut out? But the book is called The 6% Life. Just talk to us about kind of the book, what can listeners get when they check it out? What kind of insights are included?
Yeah, so I'll read it from the title from that standpoint. 7 legal loopholes that any business owner can use to design their life to 6% or less. So our average tax rate for our clients is 6.92%. Okay. And this to me kind of goes into the layering piece of strategy, right? Paying your kids, each kid is worth about a $23,000 tax deduction by the age of 7. And that's paying them, right? Doing the proper salaries. So if you've got 3 kids, you've got 2 of them, you've got $46,000 of write-offs, we're done, right? It's great, okay? When you start to need larger and larger numbers, that layering effect is really, really important. And I think one of the pieces, when writing the book, you're right. We use about 1,800 strategies across our clients.
Oh my goodness.
Right. Now, it's not all 1,800. I'm not going to call you, John, and be like, okay, number 1 out of 1,800. Most people, even the super, super, super wealthy, right? If you've got a net worth of $50 million, right? They're using about 20 or 25 strategies, because more than 20 or 25 strategies, once we get you to zero, it's zero, right? Like, you only need to implement things. There's really 2 different levels here. One of them is who wants to pay tax generally. Some people choose to pay tax. They want to support government, programs and things. That's fine. Most people don't like paying more tax than they are legally bound to pay. So most people are aiming for zero. Okay. Now that can cause problems for real estate people. So we'll come back to that here in a minute. But if we can get you to zero and you only need to do 5 things, why would you try to do 1,800? Like, you're at zero. So that's the first piece. The second piece comes into how aggressive are you as an individual? Okay. Now I want to explain. So we use something called the aggression scale. Okay. 0 to 10. 0 meaning the IRS never calls you, never ever, but you're leaving money on the table. Okay. 10 means we're all going to jail. Now, right. Most clients do not want to go to jail. Okay. So level 10, we stay away from. Level 9, I call it the Al Capone level. You're doing shady stuff, hoping you don't get caught. Okay. Of course, he got caught by the tax man, so turned into a level 10. And level 8 is, listen, all the T's are crossed, all the I's are dotted. Okay. You might get a call from the IRS. So the difference between a level 8 and a level 7 is, do you want that call? Right? Because some people are like, I just don't want to mess with it. That's fine. Well, knowing where you are on that aggression scale, so Tax Goddess will go up to an 8. Okay. We know all the things. We know how to cross the T's. We know how to dot the I's. We know how to tell you to cross the T's and dot the I's, right? So as long as you follow the instructions, like, we're good. But we'll go to a level 8. You may be a level 8 as an entrepreneur. Your spouse may be a level 2. Okay. Your CPA may be a level -4. Okay. So, right, it's happened. So depending on where you, your spouse, your family as a whole, where your CPA is willing to sign off on tax returns, right? You may need a new CPA if you're a level 6 and your spouse is a level 6. So knowing that aggression level and finding the right team for the right aggression level is super important to be able to know, well, do I need, out of the 25 strategies, do I need numbers 1, 6, and 9? Because those are level 4 strategies, and then we're at 0% and we're good. So it really becomes very customized, again, going back to your chess pieces. What do you have? Which strategies are going to work? Which strategies do you feel like you want to put in the time and effort to do? Because there are some things I can tell you how to do it. You may not want to actually do that, right? It's more work than anything. So.
Shauna, I love that. One of the things that I know, I just told my CPA, she's like, "Oh, you want to track your mileage? You got to do this." And I'm like, that feels like a lot of work. I'm not about to sit here and just
It's
track
called
miles every
Mile
time I get in the
IQ.
car.
It's called Mile IQ. I love that app. It's $5 a month. You buy it, you do it. You'll never worry about it again. It's great.
Right. So there you go. Right. So you get Mile IQ. There are ways of doing
Mile
this. There's
IQ.
certainly technology
Yes.
that helps. But I want to get on something that I don't want to lose, and I
Yeah,
think it's important, right? You talked about, hey, on a scale of 0 to 10, where are you with your comfort level as far as aggression? Where's your spouse? Where's your CPA? And I want to understand better the kind of the intersection of how the team works, between a tax strategist and a CPA. Does a tax strategist replace the CPA? Do they work directly with the CPA? Is it kind of, you're playing quarterback, talking to this tax strategist and then trying to relay that information to the CPA? Tell us a little bit more about kind of the best practices of how those teams will work together.
absolutely. So I'm going to give you the perfect case scenario, and then I'm also going to give you what we've seen. Okay. So perfect case scenario, your strategist and your CPA are two different people, right? The person preparing your tax return. Now, I think this is a perfect combination because one, you have two pairs of eyes that are both fiduciary to you. Okay. And when they work well together, right, when the strategist knows that they're not to do the tax return and the CPA knows that the strategist is not going to try to steal the client, right? Like we hear those kind of concerns. Everybody works really well together because the CPA wants to learn, they want to do what's right, they want to help their client, but they are spending all day, every day, 8 hours a day, 10 hours a day, whatever they're doing, face down in paperwork. The strategist, our job is to read all the things and to know all the things and to bring all of that knowledge and say, this is how we implement, this is how we do it, here's the checklist, here's the thing. And you work together with the client, right? Now, cases can be across the board. Okay. When we look at the reality of it, we have some CPAs, you may have worked with your CPA for 20 years, but you believe they're like a -4 on the strategy scale. If they're not willing to learn, because some CPAs will say, no, I don't know anything about that. I'm not doing it. Well, what do you want me to do, dude? I'm not going to pay more tax because you're not willing to learn. So we have absolutely had cases where, tax goddess, we will do tax returns. We really prefer people stay with their, if you like them and that person's willing to come up and to learn, we are happy to teach. I'm all about tax love, right? Let's spread the love. The only person I'm okay if they're upset is the IRS. Right? Like, they're not getting tax money. I'm good with that, right? It's per the law, we're good. So, but we have seen cases where they need a new CPA. So we will help them, right? We will refer them to somebody that is a little higher, maybe that specializes in whatever industry they're in, those kinds of things. Now, there's multiple other parties here, right? It's not just your tax strategist and your CPA. What about your financial advisor? What about your insurance planner? What about your estate and trust attorney? What about your corporate attorney? What about your real estate attorney? Lots of attorneys when we get to real estate. So, really in a perfect world, at least once a year, you're having basically a mastermind with your professionals. Okay. And I would recommend your business coach. Okay. I would recommend that you set this up at least 6 months in advance to get everybody on the schedule. Everybody has a chance to think through what they're doing. Everybody can prepare for the meeting. Okay. Side note, this would be a perfect meeting if everybody is physical and close to your location to have at your home for an Augusta rural business meeting, right? So this is a good one. But yeah, there's so many factors in today's world as far as a part of somebody's life that I truly believe that if somebody came to you and said, I'm a lawyer and a CPA and a tax strategist and an insurance planner, no, you're not. You're not, right? I don't sell insurance because there's a lot of tax stuff up here. I do not also have the space for all the insurance stuff, right? There's only so much space. And I believe that finding the right professional to do what you need is important, right? So, and investing in yourself. I mean, when we talk about taxes is the biggest expense in people's lives, period, hands down. California is paying 63% at its highest rate, the biggest expense. Okay. So if you're kind of ignoring it and you're not doing strategy and you're not looking at this, even when you're small, even when you're starting and you are only paying 10,000 in tax, that's 10,000 that you could put down into another property. So you're only hurting yourself by not looking at this and not building your proper team. So,
Sean, I love that perspective. I mean, it doesn't matter if it's a small amount. it's money that could be helping you and your family. So definitely make sure you understand some of these tax strategies. Before we go to a round of insights, I want to hit on that a little bit more. Give us just a couple of, top tax strategies for real estate investors.
Love it. Okay. So we talked specifically about cost seg, and I'm sure everybody on your podcast has talked about cost seg, so I won't get into that into detail. There's two pieces that often get missed because most people understand cost seg with your active, passive, or real estate professional. There's also the short-term rental strategy, right? So if your average rental is less than 7 days, that's something to be looking out for. That can really help you. There's also something called the aggregation election. Now, this tends to work more with a small business. So let's say you've got 4 or 5 rental properties and you're going to set up an office to manage those properties. Okay. If you buy an office condo or, someplace where your business is going to be in that building, you can actually, even if you don't qualify as real estate professional, you can still do a cost seg on that building. And as long as the building and the business are in the same location, that you can use a cost seg against your income. It's specific. It's called the aggregation election. So you can do it only on the very first year. So it gets missed often. So that's something to look out for. One of the big ones, especially for my real estate folks, you guys, especially if you're the ones managing your practice, right? Managing your properties, security. So I wasn't joking when I said writing off dogs. I have 5 dogs, 2 German Shepherds, a Cane Corso, and 2 55-pound mutts. Okay. When I go to places, I bring one of my dogs with me. Okay. So if you're collecting rent rolls, if you're fixing a toilet, if you're doing anything, if you've got your dog with you, going out to properties, or if people are coming to your home, right? Let's say you have staff or clients or something coming to your home. If your dog has the 3 basic requirements, so trained, sit, stay, come, okay? Its shoulder is taller than the height of your knee. So Chihuahuas, unfortunately, not going to cut it, okay? But your German Shepherds, your Rottweilers, Pit Bulls, even though they're shorter, do make that list just because of their protective nature for the family. And there must be a business purpose. Business purpose is one of those things that we see people miss over and over and over again, not only here with the dogs, right? They're coming with you for security when you're collecting rent rolls. Good to have your canine buddy with you from that standpoint. But when we talk about ordinary expenses, many people, and this would be the next deduction, many people are spending money out of their pocket, but it never makes it to the CPA for whatever reason, but this is a business expense. And so one of the things that we tell people to do is go through your bank statement every single month and look, bank statement, credit card, look for something that is ordinary, necessary, and reasonable for you to run your business. Okay, ordinary, necessary, reasonable. Now, I'm going to pick on you because you're right in front of me, right? In order to do a podcast, you have to have the microphone. You have to be good lighting, right? You have to have these things. Now, if you're in real estate, ordinary, necessary, and reasonable, you might need a pickup truck specifically because you're carrying bags of sand and concrete or picking up signs, rental signs, like whatever it is, okay? For you, for your type of business, a pickup truck specifically could be ordinary, necessary, and reasonable. Okay. And so many people, something as simple as you've got a construction crew, they're working on a remodel for you. Okay. Bringing them a dozen donuts often makes them work harder and more helpful to you. But people pay that out of their personal money. Like, don't do that. That's a business expense, right? You're trying to get your staff to work longer. So definitely taking a look at that. We already talked about paying the kids. Any business owner, doesn't matter whether you're real estate or, like a normal, more traditional operating business, getting the kids on payroll. The Augusta rule, huge, depending on where you are in the country. So for example, I'm in Arizona and I'm in Paradise Valley. The rental rate per event, like we talked about having all your vendors over, your clients over, the rental rate per event in Paradise Valley is $11,500 per event. Right. That means you're talking approximately $162,000 worth of write-offs in a year, completely tax-free. So there's some really cool ones. There's a lot more. If you want 7 other ones, check out the book. The book does tell you pitfalls, what to do, checklists, all those things. Tried to make it really easy to read because I want it's a passion of mine to be able to bring these big boy tax strategies to the little guys, right? This is something that's always been really near and dear to my heart. So
Shauna, I absolutely love it. As you said, if you want the full list, there's much more in the book. Make sure you check that out. There's more information available at taxgoddess.com. Shauna, right now we're going to transition to our round of insights.
ooh, okay.
Give me a failure or an apparent failure that set you up for later success.
Oh, set me up for later success. You know what? And this is awful to admit, but I almost ran out of money. When I started my business, being a CPA, okay, like you'd figure I would know money. I was so focused on trying to provide service, right, that I was not watching my own bank account. Bad move. I did not do my billing on time. Almost ran out of money. They almost shut down my bank account, which freaked me out, and I will never not do billing on time ever again. There you go.
Give me a digital or mobile resource you recommend for our listeners.
Oh, I am all about the 4-hour work week, 100%. There's another one, Cash Goblin, which is an app if you're into Profit First or Fire. It automates all the money transfers. So take a look at Cash Goblin too.
Love it. All right, give me the book you've recommended or gifted the most in the last year.
Oh, we go back to Tim Ferriss's 4-hour work week. It's every time that, you know, the one thing I will say here, so many people have started reading books on Kindle, right? Get the physical printed copy, okay? And if you can, go to the library, whatever, get the oldest, the original version. The footnotes were spectacular. Something in one of the footnotes actually saved me, well, the very first year that came out, it saved me something like 100 hours of my time based on a footnote in that book. So definitely check out the footnotes.
All right, give me a daily habit that helps you stay focused on your goals.
Cool. For me, it's about getting up early and rubbing puppy tummies. That's that minute of calm in the morning and just rubbing on the fuzzies. Just keeps me focused. I love it. Great question.
Give me your number one insight for saving on your taxes.
There's so many. My brain just went into like, oh my goodness, which one do we do? If you have kids, it's all about the kids. If you don't, it's about the Augusta rule. 100%. Those two.
Love it. All right, let's lighten the mood. You mentioned you're out in Arizona. Give me your favorite place to grab a bite to eat.
Oh, I have to say my kitchen. I'm a carnivore and I love steak. Love it all day. So we have a rancher down from Tucson that will come up and bring me a half cow every 6 months, and it's the best steak I've ever eaten in my entire life. So
I love it. I love it. Great stuff, Shauna. I really appreciate you sharing so many great strategies and insights. I think the big takeaway here is make sure that you are working with a tax strategist. You know, all those little letters behind these people's names, they actually mean something, right? Don't just randomly throw them out, but pay attention. And, you know, if you don't know, rewind back to the beginning of the podcast where Shauna breaks it down. But again, the highest level is that certified tax strategist, followed by certified tax planner. Those are the people you want to talk to if you really want to understand how to optimize your tax situation. And I love the point that you made that this is really more like a chessboard. You know, if you're talking to your CPA, you're talking to your accountant, and you're letting them know about a strategy you heard on a podcast or a YouTube video or a blog, and they just tell you flat out you can't do it, you're probably not talking to the right people. Doesn't mean you need to fire them, but you need a strategist on your team, right? Maybe they're just the one to prepare your taxes, but you need somebody who can really help you plan for your tax situation. I think that's the really important thing that a lot of people miss. Again, you have more information available. You're the author of The 6% Life. You have plenty of stuff available on your website, taxgoddess.com. So I implore anyone to check you out there. Lots of great information. Shauna, thanks again for coming on the show today, being a great guest and sharing so many wonderful insights. We appreciate it and want to make sure we stay in touch with you, and we hope you have a great day.